Good evening, traders, and welcome to Price Action Trading School. Today we will deal with price action entries explained. So this webinar won't be that long. We will cover entries that we will do also on our live trading, and entries that might be taken with our price action trading school. And you probably followed all of these classes, so you know the school is still in session. And after New Year, I hope that we will also have live trading each Wednesday, okay, during active markets. So we will try to exploit some of possible entries. Of course, these entries are, as I say, they're always very subjective, but we need to know that all of these entries are very specific. You might opt for one or two. You cannot use everyone at the same time. And the good thing is that all these things that we have been talking about are incorporated into our price action entries explained. Okay, so before we begin, as always, our standard risk disclaimer explaining that CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. This presentation is for informational and educational purposes. This video is not part of the .co.uk website, but the globalnews.com website, and by accepting this risk disclaimer, you're also proceeding further with me. So today's agenda will cover price action entries, and we will go with candlesticks, trendline breaks, POC zones, ABCD patterns, harmonic pattern entries, inside bars, master candle entries, and high volatility. So these are things that we use for our price action entries, and most of the time, guys, of course, I mean, that's my trademark. We will be focused on POC, and those POC zones will be explained in a separate webinar of Price Action Trading School. And have in mind that POC zones are, in my opinion and in my trading, are most frequently used entries out of all these entries. Other things might be considered, such as candlesticks, trend line breaks, mostly for the counter trend trading, ABCD patterns, harmonic pattern entries that we will also show in a separate webinar, then master candle entries, and high volatility. So all of these you should definitely try to master. I mean, everything is incorporated and will be incorporated into this price action trading school. We have a separate channel on YouTube, and these things should help you to make your entries and really place your trades more efficiently than ever. So we might start with candlesticks. The only candlestick pattern that I really see valid as a potential entry candle is, of course, so-called pin bar or rejection candle. The thing is, we already explained all these important candlesticks in our first lesson of Price Action Trading School, but needless to say, I will repeat it, of course, again. Those wicks are more important than bodies if we want to consider full price action information. Wicks tell you where we can find historical sellers, now moment sellers, and historical buyers versus now moment buyers. Also, those wicks will give you accurate zone, and also will provide you with potential channels and trend lines. Because guys, when you make trend lines, you connect wicks, you don't connect just bodies. These are very, very important things, and the only thing that I see valid as a potential entry is the rejection candle of the important support EMA 89 or important POC zone. Okay, So that could be usually a good sign that the price will reject and continue in our favor. Okay, so have in mind that that's very, very important. I will also use a real chart to show you these kind of things. So you already know we place our entry here. I mean our entry. We place moving average here, 89 exponential close, and we might consider entries if they're in accordance with other rules when we see a strong rejection such as T89 pattern or rejection at the top or the bottom of the range. Okay, so I mean we will of course be covering this also in examples when I will make a separate webinar with examples of entries. But here you can see when you see that the candle is, let's say, at the top of the range and the price is at the top of the range. Of course, if it's close to ATR extremes, we might consider these rejection candles very, very reliable, at least to make some scalp swing trades or shorter intraday trades. So always consider that these rejection candles should appear at ATR extremes. Okay, you have my ATR indicator. So ATR extremes, I will place it here, and if we notice that there are wicks at ATR extremes, then we might consider an entry if it's of course in accordance with our rules that we set up. Of course, we don't want to trade session that is not active, like when Wellington session on where there is no momentum. So this is my ATR indicator. So let's see euro dollar 1 hour. It gives us I will always use, guys, just for your information, 14 period here. So when you see it's 115, so this is price extreme. Of course, I'm not talking from today's perspective because today is FOMC, so we won't be actually trading today during FOMC. We might consider some entries after FOMC when it settles down, but during FOMC, I mean, guys, it will be very risky, right? But let's say that it's a normal trading day, so the price goes up and it rejects with a rejection candle of our projection high of ATR. If this is also an important historical level, we might consider trading it if we see a nice rejection candle. Okay, all of these are nice rejection candles. Okay, guys, but important thing is when to trade it. One of the biggest mistakes traders make are simply they don't know when to trade it. You need to know that we trade on 1 hour time frame mostly for intraday, guys. 15 minutes, right? Or if you go with POC zones, that is 90% of the time 1 hour chart. Sometimes it can be 4 hour, but if you watch it on 1 hour time frame, at least, it doesn't matter because these ATR levels are plotted the same on each time frame because those take those daily calculations of the previous 14 days into it, and it will show the same on every single time frame. Okay, the same is for weekly levels. You need to know how to chart these weekly important points. We covered that also in our first session. You can do it as quadrants, but you can just mark swing points. And when you have a confluence of these important levels with ATR, if you see rejection candle, then you can use it. Otherwise, rejection candles can be very unreliable because the reliability is not the same when it comes to extreme levels and when it comes to ranging markets such as these. Okay. Andy is asking, how do you get your ATR because mine is a line down? Well, Andy, this is not a MT4 indicator custom. This is an indicator that I own, so you can send me an email and I will forward it to you. So this is not a standard MT4 indicator. and you will not be able to see it unless you email me. It's of course free for all of you guys, so don't hesitate to email me. Okay, so this is indicator that really I use every day, and it's very important in my trading decisions, especially guys if I trade counter trend trades. This is very important. You need to know that most traders will simply neglect the fact that 1 hour or higher time frames are much more reliable than 5 minutes and 1 minute. And I have seen personally that some traders want to use rejection candles on 1 minute time frame. Guys, this is stupid. I mean, literally, that is nonsense. I really don't know if anyone had made any money by trading 1 minute consistently. It's too much of a noise, and this movement is nothing compared to the movement on higher time frames, 12 pips, 10 pips, really. I mean, so this is the range now, and if it was normal trading day, we could watch, for example, divergence here at this region, then rejection candle, and that could be probably a good entry. So this is the most important candlestick pattern of all. Some people call it shooting star, some people call it hammer. I simply call it rejection candle. I mean, we all have our own style of expression, so I don't really use those fancy words most of the time. I prefer to say rejection candle because the simple fact, this is a rejection, guys. Okay, this is hammer, this is shooting star, but who cares really? Rejection candle. Trend line breaks also. Trend line breaks, very important also if you want to trade with let's say retracement entries. So let's say that the price is in downtrend, this is range, and this is retracement. When retracement trend line is broken, we might consider an entry. Of course, this is the analysis part, but of course in trading part, you can also see that very often those retracement trend lines can be broken. How you do it? Well, you go on 4-hour time frame, and let's say that 4-hour time frame is going down, then you zoom into 1-hour time frame. You need to see that the price action is going up because that is retracement, guys, and then place a trend line break, and you're good to go. But in order to use trend lines efficiently, you need to distinguish one time frame trading versus higher time frame trading. So that is why we use it mostly in multiple time frame trading. So once more, price is going down, so we assume that the general trend is to the downside. We zoom into 1-hour time frame and we want to see upside price action because it indicates retracement. Remember, why? Because you want to sell higher and you want to buy lower. You don't want to sell when price is going down. You want to sell when price is going up on the trend line break because it goes in accordance with general trend that is to the downside, right? So this is solely used in multiple time frame methods, analysis, and trading. And of course, today, guys, I need to maybe disappoint you with telling you that trend line breaks are not the same as they were 10 years ago. So they're definitely not that reliable anymore. They are reliable in this perspective, multiple time frame perspective. But in other perspective, most of the time, you will see that trend line breaks are causing fake outs, and that is why I prefer to use trend line more in the analysis part than in trading. In the analysis part, it's different, guys, because when we see the analysis, we might assume our zones, okay? So POC zones are what we will be focused on, and what, of course, I will be, even, of course, in 2017, I will be placing my entries, I mean, analysis on. So expect new analysis in 2017, session recap webinars, probably one per week live trading webinar, and most of these will be based on POC zones. Of course, my analysis is always based on POC zones, but not just the analysis, but you know that POC is the zone where we place our entries, right? So that is why I prefer to put the context of trend line into POC zones and POC decisions. But for all of you who want to trade a multiple time frame perspective, have in mind that by using this concept, 4-hour time frame trend, 1-hour time frame retracement, you might use trend lines more efficiently than other traders do. Because simply put, you want to see the price on your entry time frame retracing, okay, going counter to the original trend. That is very important for you to consider and to think about. POC zones, the simple and the most effective thing I have ever seen in Forex market. Of course, I might be a little bit subjective because I'm the creator of the POC zones and Camarilla methods. POC zone, you will see in my analysis, guys, you see here, for example, it's a little bit blurry because I forgot to remove my TP. Okay, this was TP, but I recorded a video. You can check my Twitter. I recorded a live video of GBP dollar trading, but in Camarilla trading, POC zone is the zone where we place our entries. Okay, so when you see POC on my analysis, and you will see it every single time I publish the analysis, and I have been doing that for more than 3 years, POC zone is the zone where you place entries. In this example, you need to read the analysis to understand what I want to say, and then I'm not a signal provider, guys. I provide you with very accurate analysis. But I'm not a signal provider. I cannot tell you literally go long, go short. I mean, that's nonsense. And I would never do that because I'm not allowed to do that. But if you read the analysis and if you follow me, POC zone is the zone where you place your entries. So here between 26.28 and 26.48, you could have placed a long entry, guys, long entry. For POC zones, the characteristic is that we don't wait for the candle close. We trade in the zone. Okay, we trade in the zone. It means that whenever the price reaches the zone, we place our entry. So at the time when I published the analysis, the price was at 26.60. After some hours, couple of hours, it went down to 26.35, 38. Then you might opt for entry. So you don't wait for candle close. That is the biggest advantage of POC entries. And you will see in 2017, my analysis will always have POC zones. It's easier for you to follow it. It will be explained fully, as I always do, why, the logic behind the trade. But you know, guys, defining POC zones is a bit subjective thing. That is why not everyone can do it. I am the creator and I have been the original founder of these zones, so I might tell you that it's a very, very subjective thing. This is how I read the charts. So maybe that's the reason why my analysis is 80 to 90% successful if you compare it to other analysis. Because every person reads the chart differently, guys. I always say we might trade the same system together, but all of us will have different results. But because of money management, right, because of profit management, because of our risk potential, right? But the one thing is for sure, POC zone is the POC zone. So there is no change to it. It is always firm, it is always substantial, and it is always clear, highlighted by yellow, now it's yellow at this point, on my charts. So one simple conclusion. You make entry in the POC zone. How you will manage your entry? It's your own thing, guys. Some people don't like my low risk trading, but because of low risk trading, I have managed to actually keep my account in positive, guys. And you will see FCA regulations very soon. They will probably change leverage to 125 to 150. Guys, well, what can I say? I don't care personally because I've been trading with low leverage for years. If they do it, well, you need to learn how to trade with lower leverage. I mean, you cannot gamble like now. You will still be able to place, of course, big trades, big highly leveraged trades. It will depend on your account. But definitely your account should be safer. Okay? Should be safer, guys. But because of that, my account is 50, let's say 50% up. Maybe a person who traded the same but risked the more would have had like 300% up. I don't care, really. I care for my safety. Forex trading is profession, guys. And if you take Forex trading as we do, as I do at least, professionally, you won't be risking more than 1 or maximum 2% per trade. Right? So that is why I try to explain you all the time, guys. POC zone is the zone where we can all trade the same. We will all place long trade here, right? But how we manage the trade, it is a completely different thing. And really, I'm always trying to explain to people, Forex trading is a beautiful thing, guys. I love this job. I enjoy providing you analysis. This is not that I do just because that is my work, right? This is my life. And I've been doing this with passion. And I try to give you my best, always explaining how this can be a beautiful job or part-time job or something that adds an edge to your life. But you need to understand, you need to do it correctly as professionals. You don't want guys to gamble. You can gamble if you're a gambler type. I am not a good gambler. I always lose when I gamble, guys. Even in Forex market, whenever I made a big leverage trade, huge leverage trade, I tend to lose. In the long run, it won't give you any profits. In the short run, it might give you few pips here and there. But remember, this is a marathon and you want to stay in the lane racing for the full 40 miles. You don't want to actually cut it short and get out of the track before it's time. You want to stay as long as possible in this job. So POC entries, POC zones are the single most important part of my trading decisions. And of course, it will be always subjective, guys, because we always read the chart differently, but it requires a separate class and it will be explained deeper. Until then, you will always find my analysis with POC zones. ABCD, guys, ABCD. Okay, much better than 1, 2, 3, much better than standard N and inverted N pattern. A bullish ABCD is very similar, but guys, not everyone know how to trade with a bullish ABCD and bearish ABCD. Price action school and my practical naked trading that I've been teaching you applies ABCD pattern very often. For example, guys, if I see POC zone entry, so if I don't see this entry, if I miss it somehow, for example, the price went down into the POC zone, 26.38, 26.40, it doesn't matter, and I simply was not there to place a trade, right? Then another opportunity might come in the form of ABCD in the trend direction. So if I determine that the trend is to the upside, okay, I might look for an ABCD entry. But ABCD is a little bit different, guys, from standard trading because it uses some measurements. like the distance from A to C should be 6218, from B to D should be 127.2, and then when you connect it here, you get a buy opportunity. Same with a bearish ABCD. Because of that, guys, we can always use the help of some indicators here, ABCD, that might provide us with very, very good entries, considering that we know that we should take a trade to the upside or the trade to the downside. ABCD entries can be very, very profitable, but guys, before that, please, you need to understand what is ABCD pattern and when to use it. For this occasion, I will say that ABCD, this is not what I have, of course, founded. This has been a long time in the market, and the thing is that it's very reliable, guys. It's very reliable, in my own opinion. The thing is that it also works on lower time frames. That is also the advantage. And the thing is, guys, that usually when you see this from A to C 61.8 or B to D 1.272, that is the classic thing, okay? That is a classic ABCD. But sometimes these ABCD can use extensions because it's hard to spot for traders who don't trade with Gartley patterns, with Carney's teaching. I recommend using an indicator that can plot these levels automatically. And of course, guys, when we finish with a price action trading school, you will get a template with all the indicators that I've been mentioning here on price action trading school. So you will be actually receiving all the material that is needed for your trading. So patterns are very reliable, and the thing is that if we miss an entry by using our classic patterns or POC zones, we can use A, B, C, D, okay? A, B, C, D, and well, you see, this is not repainting, it's always the same, so it's also easy to backtest it. Harmonic patterns, for all of you who don't know what harmonic pattern is, guys, well, I might give you a nice information. Today I published a trader's blog. Okay, I published a trader's blog, guys. You can see it on Admiral Markets website. Trader's blog, Harmonic Trading Patterns from Scott M. Carney explained in detail. Okay, and here it is. You see, guys, that is the blog. You should read it. Okay, you should read it, and definitely after you read this, I recommend reading a book from Scott M. Carney about Harmonic Trader. You can read Harmonic Trading Volume 1. It's very, very good stuff, and it's very easy to, I mean, it's not that easy for new traders, but once you delve deeper into it, it will be very easy read. It's a well-read book, and these are the things that we might consider also in price action. I found the harmonic patterns very reliable, especially if we see it on higher time frames, considering even 1 hour time frame. And but the thing is that many traders simply don't understand the concept of terminal bar and PRZ zones that are explained in the book of Mr. Carney, so you should pay attention to it. You should read it, because harmonic trading is not a signal service. You need to know what is a terminal bar, what is a PRZ zone. So read my blog to find out. And if you're interested, of course, I will be doing a separate webinar class on harmonic patterns. Chris and I both did some smaller part. We had a webinar just introducing harmonic patterns, but this will be a little bit deeper a look in our price action training school. So harmonic patterns, a great way also to trade price action. It's not a conventional way of trading. It's a little bit different, but of course, if you understand the concept of those zones and terminal bars, it can be good for you. Inside bars also are very reliable, but to be honest, guys, they're not reliable on lower time frames. Mostly inside bars are good to give us the cue for next price movements. It will usually precede big moves, so we might use it in our trend analysis. So if we determine by inside bar that the trend tomorrow will be bearish, then we start looking for bearish entries on lower time frames. So an inside bar is characterized by the inside candles price action bar being completely covered from previous price action. The question from Sacco is a template indicators only for Admiral Market account holders. I think it will be the requirement for you guys. Yes, of course, this is, of course, every of my work is of course in conjunction with my broker of choice, and that is Admiral Market. So I advise you to switch your broker, come here, and of course you will be receiving everything, okay, full template and the indicators. Also, guys, inside bars I covered in a separate topic, and here we might see, okay, this is harmonic trading. I will get back to it a little bit later. This is an indicator that shows also these inside bars. The thing is that usually when you see inside bar and when the range of inside bar is broken, you enter the market. But when it's used on daily time frames, as I say, it can be a cue for you where the market will be. So if the price is breaking through this range, we might assume that the market is bullish. If it breaks down the range of inside bar, we might assume that the market is bearish. Okay, so that is why important thing is still on harmonic. Okay, so that is important why you need to understand the concept of inside bar. As I say, it's mostly used for the analysis, okay, because here, for example, this inside bar is broken to the upside. We might assume that the price will be bullish. This also here, bullish price action. This this inside bar is broken to the upside, bullish price action. If we see today that the price moves down, that will be a bearish move, but at this point, because it's above the range, well, we might assume that the day is bearish, that the day is bullish, sorry. So you drop down to 1 hour time frame and you can start searching for long trading opportunities on dips, of course. So inside bars, then let me just get back to harmonic. One of the indicators that is free to use and that is also popular, it's called ZAP indicator. It tries to spot different Gartley patterns and Carney patterns, mostly Carney patterns from his harmonic trading. I personally think that these patterns are reliable, but the main thing is to define these PRZ zones. Here, for example, the indicator defined this PRZ zone correctly, and you see the price has rejected from PRZ zone, giving nice shorting opportunities. The indicator can be freely downloaded, but of course, as I say, in order for you guys to understand this concept, I really strongly advise you to read a book from Mr. Carney, so you might see deeper into harmonic. It's not a signal system, or it's not a simple system. You need to understand price movement and terminal bars with PRZ zones, but it's also part of price action. Master candle, guys, we've been doing, Chris and I, also on developing on the indicator that will define master candle. For all of you who don't know what a master candle is, well, I've done a couple of webinars and a live seminar in London where I explained what a master candle is and master candle breakout. Now we're actually developing an indicator that can spot these breakouts very accurately. This is the indicator. Also has historical price movement. So the main rule is the price needs to be in between 40 and 100, 30 and 100 pips. Range, it should be like Marubozu candle, 1, 2, 3, 4 candles inside it counts for a master candle. When it and if one in the first, second, or third candle breaks down the range, we take the entry. The example of short entry here, the example of long entry here, all successful. The example of long, okay, this is not an entry. Here today we had a short entry on pound dollar by trading. Historically, you will find a lot of examples, 1, 2, 3, 4, 1, 2, third candle down, short entry here. The indicator is still in development phase, but I expect it to be soon over, and it will be officially available, of course, to all Price Action Trading School visitors and traders when we finish with Price Action Trading School. Shazad is asking, how can we get all these indicators? At this point, email me for some of these indicators that are available. Some of these indicators are not available at this point. Chris and I are developing it. But guys, when I finish with Price Action Training School, all Admiral Market traders should get a template with all accompanying indicators. So be patient. First, we need to go through the lessons. I need to teach you these things, and then you can get it all, of course. So master candle, one of my favorite ways to trade, candlestick breakouts, completely naked trading, and very, very reliable, guys. And finally, high volatility. Okay, high volatility also has been a part of my practical naked trading teaching. High volatility trading, remember guys, we did a webinar on high volatility trading. So Marubozu candle, what is a Marubozu candle? Okay, this is bullish Marubozu, bearish Marubozu candle without any wicks. But if we even see some wicks, we can assume that it's a Marubozu candle, because we can have Marubozu close, Marubozu on open. And here, guys, this is Marubozu candle. When the price gets to 78.61.878 and 88.6, we buy. Here, guys, you see Marubozu candle. When the price gets to 61.78, 88.6, we sell. Okay, if you want to get a deeper understanding of high volatility trading, get into the Price Action Trading School and watch my high volatility trading webinar. It is explained fully there. So these are most of the price action, guys, we are covering in our Price Action Trading School. As I say, I will be focused mostly and most of the time on POC zones. When it comes to my analysis, you will always see POC zone. Maybe in 2017, I might, if I spot some master candle, I might also suggest master candle breakout analysis. I'm currently speaking with other markets, maybe to include harmonic price action analysis with wolf waves. Wolf waves will be also explained in a separate session, Price Action Trading School, and a separate trader blog. Wolf waves are waves that I use also for entries from time to time, so it will be explained. The thing is that, as I say, POC zones will always be favorable way to trade. When we will have live trading webinars, we will also define POC zones, master candle setups, and so on. If we see a setup, we trade it live. But if we don't see a setup, then I give you pending orders for placing trades. So that will be live trading webinars. If we miss a live trade setup, then we go with pending orders. Is there any other price action training school? No, Shazad, this is the only price action training school. If there is any other way, can you tell me how to join it? Just listen to my webinars. Guys, this is free for all. Bring your friends, bring your trading buddies, and listen to what I have to say. Of course, when we finish it, well then, we will talk about the indicators and templates. But at this point, it is available only to Admiral Market account holders. and those live trading entries, those live sessions might be available to, of course, I think it will be available free to all, but the template and everything will probably be available only to other market account holders. That is at this point how the things look like, but it might change. I still don't know, guys. But well, 2017 is near. My plan is to finish with price action trading school somewhere in January, and maybe at the end of January we might consider live trading sessions, okay, from then on. And of course, session recaps will stay the same. We will also do session recaps. That will be also your one of favorite ways to trade the markets when I give you setups for the week. But live trading session will be based on potentially finding live trading during 1 hour live session. This webinar is recorded, and well, now we are at the end. I will close the webinar soon. Sorry. So this webinar is being recorded and it will be uploaded tomorrow. It's very informative, guys. So if you didn't manage to listen to it, please do that tomorrow or day after tomorrow, guys, because this is how I advise you to trade, and this is what we will be, of course, using in our live trading. And definitely focus on POC zones, and we might get, of course, some help from all other tools, guys. Considering harmonic trading and harmonic patterns are connected to wolf waves also. So as I say, I would prefer some higher time frame entries for potentially traders who want to swing trade for a month on daily time frame. But that analysis should I don't know if it will be published on our website, but still do not despair. If it doesn't get published, we will still go with POC zones that are very reliable. Of course, the most reliable out of all analysis and out there, 80 to 90% success ratio, and of course with potentially giving you master candle setups. Thank you guys for listening to me. Thanks for your comments. Thanks a lot, looks great. Thanks, always interesting. Ron, Yuris is saying also, Shazad, thanks a lot. Yes, guys, thank you also for listening to me. And now we need to prepare for FOMC. It will be very interesting to see what they will do. I personally wouldn't hike at this point, but of course I'm not Fed, and everything is looking like Fed is going to hike the rate. Well, funny stuff, but well, they made their own decision. They want to do it obviously before the inauguration of Trump. So, well, for me it's a little bit odd, but well, I closed my euro-dollar trade, Shazad. Shazad is asking me, are you still in the euro-dollar trade? I closed it. Well, guys, if you followed euro-dollar, we had 2 or 3 rejections from my POC zone, 1.0650, and I really cannot, I mean, I placed 3 different trades, and every time I made some profits of 20, 30, and 40 pips. So at this point, really, I'm not interested to trade. I will watch FOMC, what it will have. Today, we had a great trade on the pound dollar. And if you watch the trade, you might have got like 80, 70, 80 pips, guys, from POC zone. I hope that you took the trade. It was a long setup on our GBP dollar here, and well, it went up as expected. So, guys, thank you for listening to me. I will be here with you soon. Next week, expect me to come with the session recap, new setups. Until then, guys, I wish you to trade safe. Cheers, and talk to you soon. Bye for now.